David White for being here.
Absolutely.
He's with Car Racing Room, which is one of the biggest local CPA firms and statewide CPA firm. And,
That's right.
always answers my emails to help students out anytime I contact them, so I appreciate that. Thank you.
Caitlin, do I need to do anything with this, or are we good to go? All right, that's great. Thank you. There we go. Okay, hello. Again, my name is David White. I think I recognize a couple faces here. Yeah, it seems like there's a little bit of a delay. No, it'll be fine. I've been a CPA for about and working as an accountant for about 14 years now. Went to FSU for undergrad, FSU for grad school, all in accounting, focusing mostly on taxation. But since then, since I've been at CRI, which, as Wendy mentioned, is we're the fourth largest in the Southeast. We're top 20 nationwide, but we have more offices in Florida than any other state. So really our home territory is Florida. And within the Tallahassee office area, we like to really focus on trying to give back to FSU. One of the ways that I personally like to do that, and several of my colleagues, is through helping out some of the, helping out in the entrepreneurial space. A lot of our clients that we love pay us money, for some engagements, quite a good bit of money, and so there's a lot of value there, and some of the ways that on our personal time I like to give back is to try to help bridge some of that gap between young students and entrepreneurs who can't afford top-level services. Doesn't mean you don't have those same questions and have those same barriers and issues that come up as with any small business or any business in general. And so we like to try to give back and try to help answer some of the questions that you are naturally going to encounter, and then encounter again, and then encounter a new variation of it. And so if you do have any questions, please reach out to Wendy, and she'll reach out to me, and either one of myself or one of my colleagues can help answer some of your questions. As I begin almost any discussion, I have some stuff that we've pulled together from, mostly driven from the business model canvas, kind of framework and textbook, but really this is about you guys and any questions that you have. So I have a pretty good, I think, barometer for if we're significantly on a tangent, and then I'll rein us back in. But if you do have any questions, we can definitely step off from the material and talk about anything, especially if I can apply it to some broader applications as well. So just so I get a really quick, for context, what is our time frame here?
Anytime between 6 and 6:30, so like an hour and 15 minutes, 5 after, like 10 after 5.
Okay, that's good. Yeah, we should be plenty of time. If we could quickly, so I can have some bearings in terms of knowing how to maybe direct some of this. Maybe year in terms of sophomore, junior, senior, major, or what field you're in, and then maybe just a quick tweet version of what your company is or what that you're in the challenge for. I assume we're sitting by teams-ish, right? Okay.
My name is Courtney, and I'm a senior in the entrepreneurship major, and I represent Sunrun Bakery, which is a vegan plant-based bakery that feeds the
Okay.
And I'm Hunter. I'm a prospective entrepreneurship student in my second year here, and I also am representing Sunrun Bakery.
Okay, great.
My name is Attila. I'm not in the challenge, but I'm a freshman engineering student. And I went through something with data collections, optimized KPIs for the school.
Okay, great.
Yeah, and several of them are here, because this is open to everybody. So
Sure.
They may not all be in the innovation challenge, but they're welcome to be in the workshop. So
That's great.
glad you're here.
Okay, so my name is Daniel. I'm a senior in computational science. So senior member of the code, and our idea is to continuously React meets advertising platforms for restaurants and small businesses.
Okay, so you have a potential customer right in front of you, right?
I'm Christina Levin, a second year graduate student studying public health.
said you're not in, okay, you're just, okay, great.
But he's in the learning community, entrepreneurship and innovation, a few of those offering.
Oh, and is this one of your team members, you said? Okay, great. I know the two of you.
I'm Davis, I'm a junior, I'm an entrepreneurship student in commercial. And for this, we are trying to do caffeinated breakfast smoothies.
Okay, great. Your team mates there?
My team is me, my teammates are not here.
Okay.
Jason, I'm computational science major and physical community, and we are looking at using composting on campus to reduce food waste and also food waste.
Yeah, okay.
I'm Derek Ford, real estate major, is my partner in the same thing accomplished.
Okay, that's great.
My name is Stephanie, and I'm an international affairs major. And what I would like to do is, I'm not finished up yet, but I would like to establish an organic cooking farm brand by strengthening local farmers.
All right.
I'm a freshman, commercial entrepreneurship major,
Okay.
I'm Jack, I'm a finance major, I'm not in the challenge, I'm in the LLC.
Okay, that's great. This is, well, your finance major is the only, that's the closest thing from a major standpoint, I guess, to account, only 4 courses away from an accounting major. But for those of you, I mean, again, I'm going to kind of cover a lot of territory here, and I'll probably, my default will probably be to start kind of broad, and if we need to dive down into some weeds, we can definitely do that. But accounting and financial statement assessment and analysis and presentation is really the language. That's the one, actually there are quite a few common threads here in a lot of these companies, but at its core, its DNA is the accounting and the financial presentation. Money's money, expenses are expenses, growth is growth, and to be able to map that out and show that, and from a challenge standpoint, being able to show that, of course, using assumptions that are genuine and estimates that are realistic, but if you can map that out in a financial statement presentation form or in some kind of a numerical form, that again, that crosses all territories of business, whether it's a nonprofit, it sounds like-ish, or a bakery or an app. That is the one common language that you all share. And so I'm pretty passionate about accounting, and it's really encouraging to see a lot of people who are not required to be here just to absorb as much as you can, because a lot of the things that, a lot of our clients are a heck of a lot smarter than me, doctors, lawyers. My favorite client is an eye surgeon that makes an insane amount of money. He's insanely smart, but he knows nothing about his business. He knows absolutely, and he admits it. He knows nothing about numbers. He knows how to suture an eye, like internally, but he knows nothing about. If I say revenues and expenses and percentages and all that, he just goes, his face goes blank. So a lot of the people, especially the freshmen, there are a couple freshmen in here, you can't hear this enough. You hear it once, you maybe absorb a few terms, maybe you absorb a few concepts, you hear it again, you absorb a little bit more. You can never stop learning, and this type of, so if you have any questions, let me know. But I also know that the financial component of the challenge, to the degree that you can leverage that, if it's going to be something that you can map out and will be impactful, can be a really meaningful component to your presentation. Because at the end of the day, whether you're a nonprofit or a for-profit or a bakery or a tech company, it's still about making either your investors or your donors and all that, showing growth and showing positive cash flow and everything. So we're going to first start out with some of the basics and talk about revenue streams. It's interesting to listen to the different industries and different kind kind of products that you all are going to be having, whether it's coffee or, you know, baked goods, or if it's going to be, like for y'all, the app company, it's going to be, you might have no revenue, right? And that might even be intentional for the first set of increments. But knowing that you have no revenue and being able to explain why on a pro forma, why you don't have any revenue until year 2 or, you know, month 7 or whatever it is, that's a lot different. That is actually a lot more meaningful to intelligently define what your pro forma looks like, why you don't have any revenue until this period of time, until advertising starts to kick in, things like that. Being able to know, again, what makes up your projections is really important. And to know, for instance, why you're foregoing, if you don't have revenue from a certain area that it would otherwise be expected, why not? And to be able to explain if it comes up, usually this type of stuff is in like a Q&A, to be able to explain why you're foregoing this particular revenue stream for this amount of time, or you're not fully leaning in onto this revenue stream for a certain amount of time, goes a long way in terms of what a judge might think, what an investor might think, because they can tell that you are fully aware of the different revenue and cost systems. You are just making a business decision to focus on one or not the other, things like that. So revenue in general, how do you generate cash, basically, from each customer segment? What value do you put, what value do customers put on the benefits you provide, and what are they willing to pay? So not just where does it come from, but what are your customers willing to pay? There's a little bit of that is where some of your research comes in for the baked goods and the coffee. That is unfortunately a little bit more preset for you. I mean, if someone could get a baked good, now you have the kind of unique variation of the CBD component, but in general, I could probably drive somewhere else and get that, right, to Atlanta, or, you know, I don't know if Tallahassee has any other bakeries that do that. But there is at some point a kind of a definition of price, right? You know, whereas the app, if you're the first one to market with that, you know, that's kind of up to you. That's more of trying to glean, by doing some research, what value that your customers are willing to pay for that product. Also, what value do customers infer from your pricing? If you have an app that you're maybe not giving away, but if you're selling it for, you know, 1 penny a year or for a lifetime membership, you know, what value do customers actually, you know, to me, the instant reaction to that is, oh, it's only worth a penny for a lifetime? It's garbage, you know? Now, you ramp that up a little bit, and you got to find out where that intersection is of what is what actually provides, is it a price that the customer is willing to pay, and also kind of showcases what you think the value of the product is. What, where is everyone in how long has the challenge been going on? Where are we in the timeline of things?
We started the workshops in September, but the actual application deadline was just November 1st. And then they'll be submitting, the next submission will be in mid-January. And then the semifinals will be in February, and the finals are March 6th.
Okay. So when are the actual presentations due? Not until March 6th?
The final presentation,
final.
but they'll make a submission in January that has all the business model canvas, it's separate costs and revenues, and then in February is when they have the cost and revenues. So we kind of put that's sort of the last that they can do the research and figure out.
Okay. Okay, good. So no one has really done any true headway yet on this, right? No, right.
Courtney probably has.
Yeah.
We've done a lot.
Okay.
They actually have sales.
Right. So right. So if you have real numbers, I mean we're not talking about estimate. I mean, you are working with estimates for the future, but it's estimates as a percentage of real results is a lot easier. It's just based on where you are as a business than estimates based on just kind of research and just kind of making an educated decision. When you are thinking about the price, again, going back to the value, and for some of these markets, it's a little bit different. In some of these industries, it's a little bit different. But don't just brace it. Don't just And sometimes it's difficult to, because it's very tempting to base what you price your product or your subscription for based on the cost of what it gets to put into it. You want to be mindful of that, but don't let that be the driver. Price it on the value of what you're providing the end user, the customer, the person who's coming into the bakery, whatever it is. And be mindful and potentially explain, because for instance, if you have something that costs $5 to make based on all of your costs, and we'll talk about fixed costs and variable costs a little bit later, but if something costs $5 to make all in, and the true value is only charging $2, well, that's totally fine if in your pro forma you can explain that when you scale it up, the cost per unit goes down, but the price remains the same. So pricing based on value, not just in a scheduled calendar of when you want to recoup your investment and recoup your costs, is something that you want to focus on. So again, price on value, not on costs. When you're looking at different revenue streams, think about the different ways that you can price things. You can have, now some of you are kind of locked into a model. You're a bakery or a coffee shop or a coffee provider, whatever. You probably are going to be on more of a transactional one-for-one type basis. I go and I buy one product, I pay one time. So really you're focusing probably on other areas, marketing, things like that, to try to generate more customers, generate more of those one-time transactions. Recurring revenues, that's more like along with the applications and even the charitable. Are you going to be a charity, or is this going to be something that you're still a for-profit company? Okay, I was conveniently looking at two people at the same time. What about you? You're mulling it up, okay. That's
Do
it.
you look at what other people are charging, like for the coffee or the bakery? Do you research on what others charge in a similar industry? Or?
Yeah, absolutely, and unfortunately, that's where you can kind of get cornered into, you can't really charge beyond what your competitor is charging unless you can really show that there's a significant difference in value there. With some of these other industries, you have a little bit more free reign to interpret and kind of sell where the value is. Whereas if it's a baked good, I mean, most of your price points are going to be driven by what the market looks like. Recurring revenues, again, that's more of like the subscription-based models, or even for the ones that are considering being a charity. A lot of charities have recurring revenues both at the micro level and the macro level, maybe recurring grants that they get that are from bigger institutions that have a recurring 3-year, 5-year grant cycle where it's X amount per year. And then you have others where at the micro level where the recurring transactions might be at a individual donor or corporate level where every month someone gives $25, $100, what have you. Every customer segment needs a revenue model. Again, free is okay, but know it. Know that it's intentional if you're not charging for something. If that makes sense from a business standpoint, if it's all part of a strategy, it's totally fine. Usually that would have a time scale to it, to where there would be a point where maybe there's and that usually actually works more on the, you see it more on the application side, where it's free for a certain trial period or a beta period, and then it kind of evolves into having more kind of chargeable moments a little bit later. But it's still intentional. It's still that you've identified that you have a potential revenue segment or customer segment, and you are intentionally going to pause on trying to charge them right away. The revenue streams, again, this is not a concept about an income statement, balance sheet or cash flows. These are operating details derived from a proven revenue model and pricing. To Wendy's point, a lot of what you all are going to be doing, even the tech company, it sounds like everyone in here probably has and I didn't catch are you a student as well, that is in the school?
Yes, sir.
Okay, what is your company? Are you in the challenge?
Yeah, it's a tech company on human use curriculum,
Okay. So two-ish tech companies, and a lot of others that kind of are in middle territory, all the way down to the actual selling of an actual products. A lot of what you're going to be, to Wendy's point, a lot of what you can do to derive where revenue can come from is all of you, even the tech companies, have competitors. And you have those that are bigger than you, those that are global competitors, those are maybe in the state of Florida, in our community. And so you can look at where some of these people get, to the degree that you can, where they get who their different customers are, who they're selling to, and therefore then how they're making their money. And that's something that you're going to want to think about when you're considering creating your kind of your deck, so to speak, when it comes to the financials. We've kind of touched on some of this, but what are the different ways that you can develop a revenue stream? And obviously, it probably goes without saying, if it's preferable to have a diverse set of revenue streams. If you just have one, that is fine, but if you can have and find ways to have a variation, again, have kind of a diverse pot of where your money's coming from, whether it's the sale of physical assets, again, that's for the coffee and the baked goods, there's no getting around it, you're selling an actual tangible item, so that's one revenue stream. Usage fees, that's mostly where it's pay when a customer actually uses something, kind of similar to the physical assets, and then it has to be kind of a moment where a customer is interacting with you, compared to a gym subscription where, anyone listens to like podcasts like Planet Money or Freakonomics or anything? It was one of those two. I think it might have been Freakonomics that did this is a while ago, but they did a podcast on the whole gym economics, where gyms actually are trying to find this balance of wanting to promote themselves, get new customers, all that, but also they don't mind it if you don't show up. Because if all their customers showed up at once, they would not be able to, you would not be able to have any room to stand. And so subscription models are actually convenient in that way, where you don't necessarily have to have a direct interaction with the customer. It's more of if they find value in having that, if they use it or go once a year versus every day, that still you're both happy. Licensing, that's more, although it could be with some of the tech companies, it's more in the lines of for intellectual property, brokerage fees, I'll kind of skip over that, and advertising is another source, depending on what direction your company's going in. And again, combination of one or more. Obviously, your core of what you're going to be doing is usually probably foundationally in one industry or one way of generating revenue. But if you can layer on or even have it be part of a plan to stack on one or more ways of generating revenue, that's obviously the ideal situation. I wouldn't force it, but if you can, if it's part of a natural business growth, then that would be preferable. Again, the revenue stream is more of just a theoretical concept of a way to make money from customers. How you price it is a tactic. It's not based on the cost of what it is to create something, but based on the value that someone is willing to pay for it. Again, for your company, as you're considering how you're organizing, this is kind of like some of the concepts here is more of like thinking about the draft of your financial presentation. You can't jump straight to the numbers because you don't really know what those numbers are. You don't know where they're coming from. So starting with, crawl before we walk, before we run. Running is actually going into Excel or some other biz plan tool and actually putting the numbers in. You can't really do that until you know where you're going to be making your money from and how you're going to be spending it. So again, these are some of the concepts of as you're thinking and kind of crescendoing your presentation up through January and February and on. You want to be thinking about where you're gonna be having your money come from, where you're gonna be spending your money, which is what we're gonna be talking about in a second. Any questions on money in so far? Okay. All right, now, money out. Cost structure. Unfortunately, it's, for businesses, the making money part is the hardest part to kind of nail down in terms of how we're going to be generating money, convincing people or companies to pay us money at a certain point. Again, for tech companies, it's a little bit different. It might be all about the exit. But for a bakery where you have or for any other companies where you're actually having to keep the lights on, where you're having to pay people, it's about making money now. Unfortunately, that's the tough part. The easy part is spending money. Super easy to spend money. In what you're going to be focusing on is how to present your pro forma, your estimates, your financial plan in a way that shows a complete awareness of what your costs are, what's needed to get you to the various points that you want the company to be at, or the organization to be at, and that the results of that, the profitability, the gross margin, the EBITDA, which we'll talk about in a second, showcase your awareness of what those costs are, because ideally the number goes up, growth goes up, gross profit grows up, overall earnings go up, and so some of the things that we're going to be talking about, and then we can obviously dive into that you're going to think about are fixed costs. This is probably one of the more consistent concepts across the board here is the difference between fixed costs and variable costs. Does everyone have an awareness of what that is? Or finance major, you probably do. The main concept is that a fixed cost is something that you're going to have. It's just a cost of doing business, regardless of whether you have one sale or you have one subscriber to your application or whether you have zero. So you could think of, anyone already have, do they have to be incorporated or have an LLC yet, or is that?
Not unless they win.
Okay, yeah, to get the money. Well, so this won't be as applicable, but, and there's no entry fee or anything like that, right?
Right.
Okay, let's pretend there is an entry fee. Let's pretend it's $100.
It just goes straight to.
Yeah, it just goes, it's Wendy's vacation fund. Let's start that. If that were the case, and it was $100 to start up the business and be a part of this, and the reason why I asked about if you had to incorporate or if you had to be an LLC or something else like that, some other entity, is whether you incorporate or form an LLC in Delaware or Florida or Georgia or California, wherever you want to, they all cost money. And so that can be an example, in this case, is an example of whether you have one sale, zero sales, or you blow the doors off and you make $1 million, you're still paying that $138 or $145 a year for a corporate filing fee and then a renewal fee every year. So that is an example, in addition to a more common example, such as if you were to have 4 walls around you and have rent that you're paying. Those are examples of fixed costs, where you might have development costs if you're a tech company, where you are paying a developer to maintain your application, to keep it current, to fix bugs, things like that, whether you have a subscription sale, or whether you have any advertising revenue, or whether you have nothing. So fixed costs, and then there are variable costs, which are more directly related to the sale, directly related to money coming in, basically. If I'm selling, it's super simple to talk about some of the more tangible items. If I'm selling a cookie, that what you guys do? Okay. If I'm selling a cookie, regardless of rent, regardless of the corporate filing fee, I should be able to know and tie it down, maybe not to one cookie, maybe for a batch of cookies, which will then you can know it for one cookie, what it costs to create that one cookie. That would be an example of variable costs, because if I know that I am going to not sell cookies for a month, and I want to just focus on some of these other items, I'm not going to incur the costs that it would take to just make those cookies. And so, whereas the fixed costs are unavoidable, I've already incurred them, or I'm going to incur them. If I'm going to be in business for 6 months, a year, there are certain minimum costs that I have to have. Again, the easy example is that corporate filing fee. To be in business, I have to pay it, whether I'm going to be bringing in revenue or not. So something you're going to want to think about are, and this is critical, frankly, to the development of projections and pro forma, is more so, again, for the tangible goods, stuff that where it costs something to make something that you then sell. What are the costs that are spread out throughout the year that are unavoidable? Those are your fixed costs that don't vary based on product sales. That would be the same for the most part if you have 0 in revenue, or if you have a significant more in revenue. And then what are the costs that vary when you sell something? Another example would be, remind me, who are the tech companies in here again? 1, 2, 3, okay. So any thoughts on how you're going to be making money, or is it all about selling in the future? All about selling? Okay. Okay. Okay, same thing, or anything different? Okay. Okay, well, in the tech area is not my area. I'm the nerdy numbers guy, but I would imagine to generate subscriptions, one of the concepts, you're almost going to have to advertise to get people's attention, and you're going to have to be in front of people. You're going to have to get people to know who you are. It's not just going to be, I imagine, 100% word of mouth, right? So that could be an example of, if you know every time you do a Facebook run where you're advertising your product, or any other social media program, every time you spend $100 promoting your product, you get 10 new subscriptions. You can dial that up, you can promote the heck out of it. If your developer's happy, you can maintain the bandwidth of everything. You might ramp it up. If everything's good, maybe you're wanting to internally just incubate what you have, and you dial it down. And so that advertising cost that would then generate you subscription revenues would be an example of a variable cost where it's not fixed. It's not, you might have some minimum that you absolutely spend each year that you know is a fixed cost, but for the most part, it's a cost that varies with the revenue that you're bringing in. So that's something where, when you're working on financial models, you can have that be in there where it's a percentage of sales, where you know that if it's generally going to be 10% of the subscription revenue that you bring in, because you know that's how you, or new subscription, the growth on that revenue that you bring in, that would be an example of something that would be more varying with the cost. Resource, activity, and partner costs. Infrastructure and operational cost of sales. Again, these are more, those two buckets are more in the getting your product kind of ready to bring to market, so to speak. Like all the tech companies, you're not on the App Store right now, right? Right. I mean, you haven't. Do you have a location? Okay, so not yet. So everyone is working on the infrastructure, whether it's infrastructure from a tech standpoint, infrastructure from a physical location standpoint, kind of similar to the revenue streams. The cost buckets that you have are things that you're going to want to try to fully identify all of the, it's already bad enough that there could be a million things that you don't know, right, that are out there. So to try your best to do your research and find what costs there are that you can define, that you can put to paper, and think about, okay, well, I've identified this cost that maybe I didn't think about before. Like, you might not have known that there's an annual corporate filing fee. You might not have known that, you know? Well, now that you do know that, is it a fixed cost or a variable cost? Okay, well, then you can plug that into, and of course, from a materialness standpoint, I wouldn't revise a pro forma for $130, but if it's something that's a little bit more impactful, you might. Meaning that's not gonna move the needle to where an investor says, oh, well, an extra $130 of expenses, I'm out. But you're going to want to think about what all of the costs to bring something from its core, its infrastructure, to the operations of what you're doing, and cost of sales, which again, a little bit, they vary based on the industries here. Something you're also going to want to think about, so again, now that your product is developed and you've kind of thought about all the different buckets of infrastructure costs, the development of your product costs, all the variable costs to actually sell your product. The next, probably biggest piece, other than your physical space, and whether your physical space in the cloud and all the development that you're doing behind the scenes, or the walls that you're building up of your product, or whether it's the physical space of where your company is, usually the next biggest cost is payroll. Because all of you, I imagine, you know, a lot of the sweat equity that you're putting in now, that you'll put in over the next so many months, the sweat equity that you already have put in over the last several months, the end goal is to have that not be what carries the business, right? The end goal is going to be, or the ideal goal is going to be showing that the business can make enough money to have it shoulder some of that burden itself, you know, pay for its own employees. A lot of you are not, you know, most startups, the owner puts in their time and their energy in investment. You know, the company might be paying for staff or for a developer, but it's usually because the owner is putting in the money for the company to then pay that. That's not revenue paying for it.
That's an important thing to say too, because you know, a lot of times the finals, students typically don't include paying themselves when they look at their financials, right? And that they haven't, so they never look at that as being a part of the cost of the business.
That's right.
And judges always be all along.
Yeah. Yeah, well, that's right. Where that is an example of, what was that? Well, yeah, you can pay yourself and then put it right back in. That is an example of something that you want to be mindful of. Again, going back to when we're talking about the theory of before you're writing or typing anything down, just kind of thinking about where your money's going to be coming from, where your expenses are going to be, what your expenses are going to be. That is an example of something that it's okay for the answer to be 0 for a time period, but you can explain it, because yes, for the first 12 months, I will be taking no salary, but then boom, month 13 hits, and you can see that the company has hit certain benchmarks to where now it can afford to pay for the chief operator of this company, which is me for the time being, and then ultimately when it hits this benchmark, I can afford to pay someone else. So that is an example where if you don't include it at all, it's an easy getcha type item. But if you do include it, if you do include it, you then get the benefit of having acknowledged it, and then you can kind of tailor that to whatever fits your model. Were you just stretching or? Okay.
So when it comes to finding out or determining the cost or the price of a specific service, whether it's technology or some type of certification by anyone, would you advise doing some sort of cost allocation where some of the overhead fees are included into that consumer price? So you're actually allocating some of those costs, such as fixed costs
I would, my default would be to focus based on the value, because at the end of the day, if you are pricing something, now internally, from a management standpoint, I think it's very helpful to know effectively when you're gonna recover the cost to either keep the doors open right now, so to speak, or to have had them open all along. I think that's important to know, but I'd be hesitant to let that control how you price it, because at the end of the day, someone paying you is based on value. It's not based on, they don't care if you spent $5,000 developing something, that if they're not gonna use it, they're not gonna pay for it, And so, I think it's internally helpful to know, and it's helpful to know from a presentation standpoint, to be able to showcase, and at this point in time, with these number of sales or subscriptions, what have you, we'll have fully recovered all of our investment, and then we'll be profitable going forward. But from how you develop that price point, I would do that more based on value. And again, that's where the research comes into play. Again, for those that it's more defined, such as the baked goods, the more tangible goods, that your research it's a double-edged sword. It's convenient that your research is so readily available and that you can just go online and see what people are charging for similar items. It's also the downside is you're kind of locked into that, one variation of what they're charging. Does that help a little bit? Okay. So, and for this challenge, you really, I think, frankly, if you can show profitability, if you can truly show profitability, that is a good thing. This challenge isn't necessarily what is your 10-year plan. So some of these items will be more a little bit down the road, but just in the spirit of some of the freshmen and some of for all of you, but also the people that are not even in this challenge, or just wanting to think about business concepts. I mean, if you're going to be bringing on people, and you're going to be paying people so this is no longer their company. No, I mean, this is not just your company and your time. Now you're trying to pay people to work for you. How are you going to pay them? What is the standard in your industry to pay them? Again, that's something where research comes into play as well. What are the benefits and bonus structures that you might have? A lot of startups find that balance between we're cash strapped now, but we need talent, we need people. So one of the common method of showing that you value someone, an employee, and sometimes, again, that can be yourself as well, you're part of that equation, showing someone the value there, even when you don't necessarily have the cash to pay them, that's where you see companies issuing out some variation of stock options, basically, ownership options, where stabilization is chaos. What is your name? What was it? Attila? Okay, that's what his shirt said, so I didn't just make up a nickname for him. Is that a band or something? Or
What's that?
is that a band?
Oh, no, it's an anti-central bank, anti-federal reserve, that sort of.
Okay. If we start a company and I don't have the cash to pay you, but I really want you, you're a critical part of the team, a common way of showing value to you and also kind of locking you in is to give some form of, maybe not 20% right off the bat, because then as the owner, for me, I just took on a significant amount of risk, where if I've just met you or we've known each other for 6 months, but I've had this company incubating in my head for 6 years or 2 years or 6 months and a day, I may not want to part with all that interest in my company. One of the ways that you see companies commonly do it is effectively being like on the vesting ownership schedule, where you and I come to an agreement where I say in this case, you'll get that 20%, but it's going to be spaced out over 4 years. And after year 1, you get 5%. After year 2, you earn 10%. After year 3, you're 15. And then after year 4, if you're still with the company and all's well, boom, your 20% kicks, or you've hit that 20% mark, and all along you've been able to take out profits, you've been allocated equity. The inverse is true. You can also have it kind of in the opposite schedule, where maybe I say, boom, you get 20%, but if you leave after 1 year, I get 15 back. If you leave after year 2, I get 10 back. And so either what you can think about that. But so there are ways where you can, and this is what I meant by if you acknowledge it, you can then kind of justify it based on, if you acknowledge it as an item, you can then justify and kind of tailor it to what your business model is. For instance, if in your financial pro forma, you may have lower compensation costs compared to maybe otherwise your competitors, right? But if part of that theory, and then it gets called out as a question or something, if part of that is because you are acknowledging that you're going to be bringing on employees that you're also going to be giving equity to, while I don't know if I would necessarily agree with that from wanting to keep all the ownership for the true owner, that could be a way of justifying that. That is still providing benefits and providing value to people conveniently without cash. Now, how many people do you know, you can't pay your rent with equity options, right? So, I mean, at a certain point, you got to find some reasonableness there. People aren't going to work for free, but that is something that you can have as in the back of your mind, and this is less for this challenge, more for just thinking broadly about a lot of you that are in this room. This is the cool thing. I like Wendy. A lot of the people that are, all of you that are in this room, whatever idea you have that you just mentioned to me is not going to be the last idea you have. You know, it probably is not the first. And so a lot of what we're talking about is, and I guess I should be saying this is for the challenge, but a lot of what we're talking about is not just for the challenge, it's for maybe that third idea down the road or fourth idea. So just things to think about.
Ultimately, we want them to know how to start their own business. Or is this one or whatever.
Yeah,
right?
yeah.
That's really our goal in life.
Yeah, well, and the challenge is a great way of cutting your teeth in those different areas and being forced to fine tune some of those thoughts. Okay, we kind of just talked about what are the costs of each element of your business. Where are the economies of scale? Where can you ramp? You know, I used the example in the tech company of being able to ramp up subscriptions potentially where your profitability goes up because you are just simply hitting a higher volume of sales to the degree that you can identify where those are and then potentially leverage those. That's something to think about, to potentially include as a strategy. A lot of times it doesn't have to be do something or don't do something. It can be a hybrid of both, where maybe you don't do something for a period, but it's part of the strategy to do eventually. I think, okay. Again, all of the stages of this life cycle that you're in, from idea, maybe not the pure idea generation, but once the business is truly kind of out of your head, all stages have costs. You might not think about it, you might not have defined it yet, but they all do, and that's part of this discussion here, is for me to impress on you to truly think about where all the costs are, even some of the ones that are a little bit hidden. Just as a quick example, how many of you have separate business cell phones for this concept that you have, right? Exactly. Heck, I don't even have a separate business phone. Somehow they convinced us to, I'm joking, we used to have business phones, separate phones, but everyone got so tired of carrying around two phones that we just kind of smushed them together. But all of what you're doing, I bet that those laptops are personal laptops, right? Maybe, yeah, okay. And a lot of what you do on those now, and especially as the companies grow, a lot of what you're going to be doing, you're going to be incurring a lot of personal costs. This goes also back to Wendy's point of not paying yourself. You might not have put in any cash into the business yet, but you've been putting in resources. You've been paying your cell phone bills. You've been buying up personal laptops. You've been paying your rent at your house or your apartment where you're working out of. And so there are a lot of costs out there that are kind of hidden that aren't necessarily directly coming out of a business bank account or planned to come out of a business bank account. So all stages from actually creating and developing the company and delivering the value to customer relations and kind of management, and then the actual selling of the product. They all, from the full life cycle of the company, all stages have costs. What are some strategies for decreasing front-end fixed costs? I know I had some examples there. I'm not sure what I meant by that. Well, that's also where some of the, I had some examples for that that I'm not jumping up with that.
Courtney's business in the bakery, she's obviously using her kitchen at home.
Yeah, that's a good example.
If she gets to be a big business, she's gonna have to build a commercial kitchen or rent a commercial kitchen, something. I mean, that one's.
Yeah, absolutely.
gonna have some serious fixed costs, you get to the point where you can't use your home kitchen.
Yeah, at a certain point, you're going to literally scale out of it. You're not going to be able to make, most kitchens. Well, I haven't seen your kitchen, but most commercial kitchens have a variety of cooking locations and baking locations where you can have several different things going on at once, different temperatures, all that. Whereas I imagine you have mostly maybe just one main area, and so you can do trials of different things, but eventually you're going to hit a period where you can't scale. Similarly, you not having the first dollar that comes in that you raise go to pay yourself. That's decreasing fixed costs. Doing as much as you can yourself. I'm always envious of the startups that have on their team someone who can code and who can develop things, because that costs so much money to outsource that. And if you don't know how to do that, like this guy wouldn't know how to do, you'd have to pay someone, right? And you can sometimes use you can leverage the fact that that could theoretically be done by anyone anywhere, and so you can have it be a hyper-competitive bid that you price out your development costs for, but it's still really expensive, and it can be really expensive. And it seems like from talking to, I have clients that are in the tech area and then clients that are in the construction area, and the one, maybe the only common thread that they have sometimes is both with tech development, and with construction. You price it out, but you don't know what you don't know. When you rip up some floor, you don't know what's underneath it, and then all of a sudden your costs start going up. And same thing with tech development sometimes. In addition to the landscape there is always changing. So some of the things that you can do to, that's probably a good theme to focus on. What can you do yourself? What can you incubate your own self? Sure, you might want to have a new business laptop, a new business phone, new business kitchen, and all that. But if you can do a lot of that yourself, that would help, or part of your team, that would help decrease those costs. Obviously, the con being you're going to hit a, hopefully, pretty quick ceiling there in terms of what you can do with that. Yeah.
Because you mentioned it, doing the business outside of your home, that is something that you can understand in Texas as well. Sorry.
No, it's fine. Oh, no. Short answer, ultimate answer, yes, you can. There are a few different ways to go about doing that. Quick and dirty of it is IRS basically allows for a simplified version where you can They basically have conceded that if you can basically use the square footage of any place that you use exclusively for business times $5, and that can be a write-offable item, or you can take a more thorough approach of looking at the true business use of a home, and say if you use your home 50% for business, or that's 10% for business because you have a home office, you could theoretically take 10% of your rent, 10% of your utilities, 10% of your Comcast, and deduct all those as a business expense. I'm a very big proponent of, and you all, especially some of the freshmen, they're pretty young in this room, so you might not have had to file your own taxes, but when you do, I'm a big proponent of having your tax picture reflect the reality that is actually occurring. If you really are working out of your home, you're decreasing, you're not paying rent to go work somewhere else. You're instead paying rent to your home, and you're intentionally making a business decision to not work out of somewhere else that you'd be paying rent and utilities and Comcast and all that for. And you'd have to buy some supplies and Windex to clean things and all that. Scratch that last one. That's more in the weeds of things. But the theory of, if you truly are using, not in like a shady way, where you have someone where they set their laptop in their living room and go, oh, look, my home office now. I'm not talking about that, but if you truly do have a dedicated space, you are absolutely allowed to use a reasonable methodology to arrive at a way to capture a business deduction for that.
What about your car? Like if you're using your car to deliver.
Well, that's another good example of a hidden cost where, really for any of the companies that we're talking about, at a certain point in scale, you would have yourself and your employees more so potentially use business vehicles. Maybe if they're going to be a salesperson going out and selling the product to various companies, and they're going to be putting tons and tons and tons of miles on a car, you might have a business car for that. I mean, if I'm that person, I would want a business car for that, not be put all those miles on my car. Same thing if you have a delivery van, eventually is what you would want. Right now, your delivery van is your car, I imagine. And so, in the meantime, before you get to that point where you have a business asset, your personal vehicle, there are two ways to go about and I would actually have this be, if this is going to be a predominant part of your business, you could have this be in the financials, even just like transportation costs. But just a quick point on the tax side, and something to think about for employees, because if employees using their personal vehicle, they very well may want to be reimbursed for that. The IRS generally uses the mileage method, so miles driven that you have for business. And if you're bringing on an employee where they get paid $10 an hour, but they're going to be driving 100 miles a day, that might be where you also include some kind of a mileage reimbursement.
So what kind of documentation should we be keeping in place for audit at some point, like receipts from the gas station?
Yeah, let's. My spidey sense is going off on tangent there. I'm going to park the tax questions for after. I'd be glad to talk with anyone about tax questions. Or if you all have tax questions after we get through this, I'll talk all day about taxes. Okay, so just because I know it's past 6 o'clock, again, testing your hypothesis, that goes a long way when it comes to the challenge. To be able to showcase and say and reference what you've done to already provide a sense of confidence in the numbers that you're using, both from a money in side. So how do I know that customers are willing to pay this? Well, based on this poll and survey that I've done of likely customers that are in this demographic or this demographic that are the people that I'm going after, I'm sure you all have tools for being able to assess some of this, that they are very comfortable that for what they would be getting, which is what my product is delivering, this is the price point that they are comfortable with. Both on the revenue inside, in how will they pay, that could be if it's a transaction based versus if it's online based, things like that. both on the money inside and also on the costs and expenses, to where, you know, yes, you can think about, well, I think insurance might cost, you know, $1,000 for the year. Well, have you kind of vetted that number a little bit? Have you called 3 or 4 different insurance companies to see what business insurance would be before you slap that potentially questionable number in your financials? Those are all different things that, both on the revenue inside and the revenue and the cost out, that I would say to test potential customers and vendors. You know, don't be afraid, don't harass people, but I wouldn't be afraid to inquire for a quote, what it would cost, and that you can then bake that into your assumptions. And you can do that online, you can do it off. I remember hearing some people that did a lot of their survey questions, they did it almost exclusively using online tools where they surveyed some of their peers, or some surveyed if they could get some other customers online, they could, or people to answer a survey, and off. You know, I mean, there's beating the streets and just talking to people and finding out what they would pay for certain things. All of that would go back, all of that to provide confidence in the projections that you're going to be using. You don't necessarily have to have it in the presentation, but being able to reference back that you have validated these numbers by doing X, Y, and Z goes a long way in terms of it being something that a judge just kind of keeps poking at, or it sticks in the back of their mind as something that just didn't sound right. Changing that to being something that they're like, oh, well, they did the research. You know, they at least have a sound leg to stand on when it comes to having that be a part of their presentation. You know what this is basically, you know what we mean by that. Here's what we thought. Here's what we did. Here's what we found, and here's what we're going to do next. I think this is the okay. This is going back to the and there are a lot of tools out there online where you can. And even Excel has variations of formulas where you can kind of download some kind of pre-formulated spreadsheets where you can kind of plug in some of these numbers and it'll help develop it. But basically, I find it very helpful to know when someone is going to your point, when they're going to be profitable, because just looking at the actual baseline numbers of something, one subscription costs $20 a month. You know, my cost of labor, developers, and my time, you know, as the operator, let's say this is year 2, is going to be all in $50,000 a year. That means nothing until you can show it based on assumptions and estimates that, or that might initially sound horrible. $20 a month, $50K in expenses. That sounds like an unsuccessful business. But if you can show that based on the scale of it, that yes, it's $20 a month, but we're going to ramp it up, and I estimate to have 20,000 users by year 2.5. That is something that when you throw that into more of a visual, where you can see where that after a certain point in time, your fixed cost. Well, this is the formula right here, and this is pretty general, but the number of units, the benchmark, the number of cookies that you'd have to sell, the number of subscriptions that you'd have to sell would be the point. That's the formula. The point at which you would your total profit would surpass not only all of your fixed costs to get there, but the cost of actually making that one extra sale, so to speak. Things that I would include, if it allows for it. Again, this is all just general. I would let the strength of your company determine what you emphasize. Because how long is the InNOLEvation Challenge presentation? 7 minutes. 7 minutes. Every second that you talk or don't talk, sometimes a pause can go a long way. Every second that you talk is really going to be meaningful, and so I would encourage you to not get in the weeds. I think being aware of all the weeds is important because judges love to ask tricky questions and try to get you, and well, how do you come up with this number, and things like that. And to be able to know and reference in Appendix C that this is how you came up with this number based on this test that you did and this research that you did. And
Some people even do extra slides, like that you don't do in your.
That's right. I love it.
They know, oh, the judge
Yeah.
is probably gonna ask this, then they can.
that's always like a, whew, you know, like I love it when I see that. What Wendy's referencing is it might not be something that is purely just in the back of your head. You could actually prepare 20 slides, even if your main 7-minute presentation is just 13 of them. And then kind of anticipating some of these drill down questions where there might be maybe knowing where some of your knowing where some of the questions might lie, and then having the research ready to queue up and reference instantly is always very impressive. Anyway, so I would let the strength of your presentation determine how much you spend on it from a time standpoint. But in general, I think if you can showcase where you're getting your money, so revenue, and then the growth. There's no expectation that any business is going to start out day one as profitable as they're ever going to be. No one expects that. Everyone expects there to be either a low profitability or, frankly, a loss period for several months, maybe even several years, depending on the business. But to be able to showcase the growth of the revenue, and then tracking down the growth of the gross profit, and then the growth of earnings before interest, taxes, depreciation, and amortization, that is where I think if that is a potential strength of your presentation, that's where I would kind of, you might know it, the judges aren't going to know it unless you paint that picture for them. So.
For the finals too, like you can submit an executive summary, which isn't a long thing, you can highlight things, the judges do get those.
Yeah, that's right.
So things you don't let them include in that in your presentation.
Those are all the slides. I didn't time it perfectly. It's 6:15. Any questions that relate to the group material that anyone you want to talk about?
Use the cube. You can stand to the
Yeah,
cube.
sorry.
So in regards to the early stages of the startup, you talk about, we want to hire some talented people, but we don't have the funds to do it. So, we're going to promise them X percentage of stocks over a certain duration of time. Could you talk about how the concept of entrepreneurship ties into that?
In what way? You mean in terms of like trying to get people that where
In
they
terms
think
of
they're valued?
growth of the company,
Yeah,
long-term vision.
Yeah, absolutely, because not every person is going to be not every person on your team is going to be the person that's wanting to purely be the risk taker and the one that is wanting to be always thinking broadly about vision and things like that. You're going to need people that balance out your team, and need people that maybe are wanting to have more security, which is a little bit more that would help balance out some of maybe your otherwise risk-taking desires. And so that does allow for, again, more of an intersection of, yes, you can pay them money, but you can also try to acknowledge their efforts in other ways. If that's not the direction I'm going to lean in, I can go ahead.
And a lot of times when you talk about entrepreneurship too, you're talking about an existing bigger organization, right? That you're coming up with a new initiative or something within like a company that already, like IBM stuff works, right?
Yeah.
Right.
Yeah, that's right. And honestly, that's in examples like that, that's pretty no cost, high reward. You let someone own a piece of the assets in something that they're going to be putting their sweat equity into, and if it doesn't work, if I'm IBM or the company, if it doesn't work, I didn't pay them anything. If it does blow up, then they're happy, I'm happy. So, yeah. Any other questions? Yeah, fine.
Thank you. When it comes to a startup business, what would be your advice on choosing prospective numbers on like, prospectively, I expect to have this many customers by this certain date or by year one and by year two? What would be your advice since there's no established income statement or balance sheet already? How would you go about picking an estimate number to start off with?
Yeah, that might, it would probably, I would use maybe some function of what the current marketplace is for products similar to yours. If you know that the market, if the market for, and remind me again, what is your company gonna be doing?
Health informatics, so an app for Alzheimer's patients and caregivers.
Okay, well, so that's a pretty definable customer group then, right? I mean, you probably know the statistics of how many people and how many family members of people that have Alzheimer's are in the US, right, or around the world. And there are likely other medical programs out there that target, maybe not that exact niche, but something similar. And I would come up with a goal of, I want to target 1% of the customer, potential customer, global or US potential customer base, and mark it as by year three, if we target, and we'd have to see what the numbers are, if you were to target by year three, 1%, that might be 0 one month and 100 next month, and 150 the next month, and try to get to that goal. But I think probably your biggest question would be, what is your potential customer? If I create a company for some product or some service that there's only, I'm the only one interested in it, the marketplace for that product, the customers, potential customer base out there is going to be, nothing or none. And so I think being able to come up, the pro forma is going to be your best estimate.
Mm-hmm.
It's not going to be, the pro forma financials are going to be your best estimate of your future results. It's not asking you to predict the future. It's asking, you're having to come up with your best estimate and be able to show and be able to provide support for why you're arriving at that. So part of that variable is going to be how realistic is the growth in for instance, the subscriptions, the number of customers that you're saying you want to have as a goal. How realistic is that compared to the customers that are out there that you could try to get? You know how many people eat baked goods, or I'm sure there are publications out there that reference how much Americans spend per capita on baked goods every month or every day or every year. How many people stop by Starbucks every morning, things like that. So being able to start out with what your global base is, by global I just mean in general, your target base, and then being able to work out goals from there is something that you could reference to help justify an estimate of what your goal could be.
It's pouring outside.
Is it?
Oh, man. Wow.
Yeah, you want to talk about taxes now?
Yes, always.
Any other questions? What now? Yeah, what's up?
Contact information? Contact information?
Yeah. Yeah, normally I have that on. Yeah.
Yeah, we have been in Sprout, right?
Yeah, that's me. My email can sometimes get overwhelmed, so I also, I'm pretty good about clearing text messages, so feel free to text if you have any questions. If it's something that requires more than just like a quick, yes, no, or something like that, then that would be like, hey, when can we chat for 5 minutes? But I do try to respond pretty timely to emails, and glad to help people out as you encounter questions. Again, this is not going to be the last. It's not going to be the last foray that you have into the, this space of wanting to create a concept and see if it'll work out. So if I can't help you out, I can put you in contact with someone that can. Yeah.
Thank you.
Yeah, what's up?
So, do you have any recommendations? Do you have any recommendations on services or online, like Skillshare kind of class, things like that, where you can, view a couple seminars or something to give you a foundation, not to get me to your level or anywhere near, but just for basic bookkeeping and the ins and outs and stuff, especially with tax season being 4 times a year, and stuff like that, just to make sure that we're not in violation of anything while we're still growing to the point where we can afford to have an actual accountant do our stuff every tax season.
Yeah. I know there are, and that's why, Caitlin, I asked if there were any things that were out there that you all would consider. That might be something that in the future, I know there are, I recently just encountered bizplan.com, and that helps. That's more of business plan generation, but the theory of what it does is it provides a very navigable, user-friendly experience of being able to. You have to pay them, but it's a subscription model. But do you have any resources?
I use Live Plan in my classes, which is the same kind of a thing that you have to pay for.
Yeah.
And it helps create your financials and
right now.
As far as taxes, we do a roundtable where David comes back and does a roundtable in the spring, right before.
Yeah.
Just when you got plenty of time during tax season.
Yeah.
But to help students know, you need to file your annual reports and the types of things that keep you out of trouble.
Yeah.
I mean, what's the basic you need to know that where you don't get a big fine of $400?
Well, and so now I feel pretty comfortable kind of making that transition. Yes, absolutely. Every year, we can do it more often, but every year toward the turn of the year or after the turn of the year. So let's say maybe we should probably even get it on the books for January or something, January or February. Someone from CRI, usually it's been myself, maybe a colleague or two, will come and love to keep doing it, give a roundtable about what are your obligations. But we have a whole presentation on where your compliance needs are, what you have to do. Right now, it seems like all but maybe 1 or 2 of you you've not come alive yet with the state or federal government. Once you do come alive with the state and with the federal government, and then especially once you start having employees, even just one, even if it's yourself, truly an employee, not just you taking money out of the company. There are whole sets of things that you have to do like clockwork, otherwise you'll just get unnecessarily dinged and penalized and all that. It takes many steps before something like going to jail or anything. So I'm not trying to scare you, but you can get penalized if you say to the state or say to the IRS, I'm in business, and if you don't do certain things, they can ding you. We have a whole presentation on that. It's a good topic to be mindful of. I probably would boil it down into a couple different. I probably would boil that topic down into maybe three main buckets. Income taxes. State of Florida, thankfully, for the time being, we have no income tax. So we don't have to worry about state, but federal government, you do. Sales tax, which is state of Florida, that's a big thing to be mindful of. That's a whole separate discussion. That is something to be scared of. You don't want to be I guess really one of 2 different veins. You don't want to be not charging sales tax when you should have been, and you also don't want to be thinking you're collecting sales tax but not remitting it and reporting it the right way, and then your IRS, the DOR would say you're stealing. You're charging sales tax, but you're keeping it, you're not giving it to them. that does put businesses out of business. If you are negligent with it, and you just ignore it, they can really be, DOR is all states are pretty aggressive with that. Yes, that's how they make money, is sales tax revenue. That's why we don't have a state income tax, because we have sales tax. Federal income taxes for yourself and the business, sales tax, if you, frankly, states are getting so aggressive that even what used to be, they're trying to even go after even software companies, if it can be a software as a service. A lot of states now charge sales tax or enforce the collection of sales tax, which theoretically, if you're a business, it's a neutral cost to you. Sales tax gets paid by the end user. It doesn't get paid by you as the company. Now, depending on the size of scale of your company, you might have to pay a sales tax provider. You've probably heard of, gosh, I could remember it 5 minutes ago and 5 minutes from now. TaxJar is one. TaxJar is one, and then there's another, Avalara. Those are the two. Those are the two bigger players in the market, where all they do is they're cloud-based. They seamlessly help you comply with sales tax obligations. And obviously charges like a monthly fee, but they can help take away that stress. If you're going to be in multiple states, for instance, if you're a tech company, you might have people all over the country that are subscribing to you. And if you happen to be in that niche where maybe a state could argue that you owe sales tax to them, you just want to ensure compliance there. Anyway, so there are resources out there, but if you don't know that it's a problem, you don't know to then approach a service provider for it, and you don't know to get it, have that box checked. But federal income tax, sales tax, and then payroll taxes, which are which likewise something that state of Florida, well, any state and also IRS can get pretty aggressive with if you're not withholding appropriate amounts of income taxes or employment taxes from your people, and not sending it to the appropriate party. So that's a whole separate discussion. Be glad to have any one-off conversations with you all, or if you want to talk about anything right now for a minute or two. But it's not something that you need to be scared about right now. None of that's anything you need to be scared about. It's all something that quite literally every business tackles every single day. But you do have to know what your compliance expectations are with the places that you're in. And then once you know what they are, it's super simple to check those boxes. The biggest area of, the biggest area that is the biggest area of concern of that creates problems is when people don't know that they should have been doing something.
I was just going to say, because that's where I know you've helped students a lot, or anybody starting a business, is knowing how to set it up, right? Knowing what you need to keep track of, and knowing so kind of set up your basic stuff, because then you can have sort of a bookkeeper use the bookkeeping stuff until it's time for taxes.
Yeah.
I mean, that's when you want a CPA. It's not a do-it-yourself.
Yeah.
Once you're really an established business.
Oh, for sure. Yeah, and
I'm not just plugging you. But I mean,
plug away.
You
No.
need to know what, like you say, you need to know what you need to be keeping track of, and
Yeah.
what records you should keep, and how, set up QuickBooks or whatever, right?
Yeah.
You have the numbers.
Yeah, that's even a separate, well, that's all part of the same general conversation of kind of what's the life cycle of your business look like. And from an accounting and financial standpoint side, usually businesses go in some kind of an evolution where right now you're in more of the pro bono stage, just helping you out, wanting to help you jump up to the next step and things like that. But then let's say it's a year from now, 2 years from now, and it's more of a bona fide business. You might very well still be a student, but it's a money-making business. That is then where I usually see companies where they may have kind of several consulting sessions where they say, hey, I sometimes equate it to driving a car. Hey, am I going the right way? Hop into the driver's seat, pull out the map. They don't know what maps are. It used to be where the person in the passenger seat, it used to be a person in the passenger seat would fold out the map and find out where you're going and all that. But hey, am I going in the right direction? Are things looking right? How do I count for this? Things like that. And then at a certain level, from a relationship standpoint, at a certain level, they either themselves get too busy or the business gets so successful that it just naturally encounters a lot more complexities. Eventually, a lot of businesses say, here, you take the wheel, or a combination of you and a bookkeeper take the wheel. The bookkeeper does all the day-to-day stuff, but then you come in and you do the quarterly and the annual things. And so there's no one-size-fits-all approach, but having a discussion about what that looks like so you can kind of go into some of those considerations of what the future looks like, eyes open would be, is good knowledge to have.
Thank you very much. I think, you all should all be staying out of jail, staying out of trouble.